If you've been trying to build an options trading strategy that actually works, one that doesn't just look good on paper or work for a week before blowing up your account, this is the video you've been waiting for. I've been trading options for years. I made the mistakes, lost the money, and learned what exactly works. Today, I'm going to walk you guys through how to build a profitable, repeatable strategy from scratch, even if you have a small account or you're just starting out. By the end of this video, you'll know what to trade, when to enter, how to manage your risk, and exactly when to exit. And you guys should know me by now. I'm not just going to tell you, I'll show you guys a real life example of a winning trade using this exact strategy so you can apply it immediately. Watch this video from beginning to end, and if you want more in-depth breakdowns like this, help me hit 100 likes and I'll drop part 2. So let's get straight to it. Let's start with why most option traders fail. Here's my personal top 3 reasons. They follow plays blindly without understanding why the trade was taken. 2, they chase breakouts, buying too late or hoping momentum bails them out. Or they hop between strategies, never sticking with one long enough to master it. Here's the truth. You do not need 10 strategies. You need one strategy that makes sense to you and that you can repeat over and over again with confidence. That's what we're building in this video, something simple, powerful, and consistent. Now, all of you guys should know, all great strategies start with one thing, and that's edge. This is what gives your trade a higher chance of success. So ask yourself, why would this trade work? What is my setup trying to exploit? For the people that don't know what edges are, it's things like breakout patterns like flags or wedges, volume spikes on support bounces, earnings or news-based catalysts, or market-wide trend continuation. For me, I personally love volume confirmation at certain key levels. When price reacts to support or resistance and the volume confirms the move, I'm in. Pick one setup, just one, rather it's a flag, a VWAP reclaim, or a support bounce, and stick with it and master that one thing. Next up, let's talk about chart setup. Consistency in your view of the market helps you take better trades. I want to give you guys my personal setup. You have the daily chart for bigger picture direction, lesser time frames for entries and exits. My favorite indicators are VWAP, the 8 and 21 EMAs, and volume bars. Then you have support and resistance zones I manually draw. That's it. No 15 indicators, no clutter. Simplicity always wins in the game of trading. Set your charts once and do not keep changing them. Use the same time frame combo and tools on every trade. Get used to what works. Now, something that's not talked about a lot in option trading is strike and expiration selection. This is where even good traders go wrong. They pick the wrong contract. So let me break it down. For an example, if you're trading momentum, you should be looking near the money. If you want a safer swing, you go in the money. Avoid deep out the money contracts unless it's a small lotto. As far as expirations, if you want a day trade, which I don't recommend, that's a 1 to 2 day hold max. If you want to swing just like me and the people in the Discord, that's 2 to 3 weeks out minimum. And of course, you can't forget the Greeks. I'm going to break this down very quickly. You have delta that tells you how fast your contract moves. You have theta, which is the time decay that eats away your premium. And IV, also known as implied volatility, tells you how expensive the contract is. Avoid buying inflated premiums. If you're unsure, buy more time. You can always sell early, but you cannot fix a decaying contract. So going back to the selections, if you're trading momentum, I would recommend a delta between 0.4 to 0.6. If you're looking on the safer side, a delta 0.6 plus is always a good thing. Now let's talk about the heart of the trade, and that's entry and risk. Here's how I personally approach it. Entry, I personally wait for confirmation, rather that's price reclaiming a level, volume surge, or EMA cross. Don't guess, let the market confirm your setup. I cannot express how many people, when they play options, they just buy all of their contracts at one level without any confirmation. Then they're shocked when that price is going down. As far as risk goes, never risk more than 5% of your total account on one trade. Set a hard or mental stop, usually just below support or invalidation, and only size in big when the setup is clean and confirmed. You never want to get inside a trade if you're a little hesitant. Wait for full confirmation before you place your entry. We're right now in the Discord waiting for a stock to drop $1. If that goes up $2 from here, we missed the trade, but I wouldn't care because at least I'm sticking to my own trading strategy. So let me say this loud and clear. You're not here to win every trade. You're here to survive long enough to let your edge play out. A winning trade means nothing if you don't take profits. So let's talk about exits. Here's how I personally manage my exits. I trim at 20% to 30% with no hesitation. I move my stop to break even or better after trimming, and I let the rest ride toward my personal target, whatever setup that is. And also, if it turns red again after being green, I simply cut it. I don't give stocks second chances. Set your profit zones based on these two things: previous highs and lows on the candle structure, or you have VWAP or EMA levels. You must know your exit rules before you enter. That's how you trade without emotion and how you protect your capital. If you go into a trade without knowing when you're going to exit, you've already failed before you even started the trade. Here's something that even experienced traders overlook, and that's the market's environment changes, and your strategy has to adapt with it. Think of it like this: you wouldn't wear the same outfit in a snowstorm and in a heat wave, right? So why trade the same exact way in a bullish breakout market as you would in a choppy sideways one? Let me show you exactly how I adjust based on market conditions and how you can too. Ask yourself, is this a trending market? Is it a range bound and choppy one? Are we in a high volatility or low volatility phase? I'll recommend using things like VIX and SPY or QQQ daily chart to gauge it. You have to match the strategy with the market. So for an example, trending market, you should stick to momentum plays, breakouts, and ride the trend. For choppy markets, look for a quick reversal off key support or resistance and take profits faster. For high quality markets, size down and buy time. Premiums move faster and fake outs are much more common. For low volatility markets, go with tight range consolidation breakouts and lean into credit spreads if you're that advanced. If you guys want, I can make a video on spreads as well. Even in slow markets, money is always rotating somewhere. Always tell people to keep an eye on tech, rather that's XLK, financials, XLF, energy, XLE, or even healthcare, XLV. These are a list of things you should keep an eye on as you see money rotating in certain sectors. When one sector is strong, it often leads for several days or weeks. That is your edge. You have to focus on those setups first. If the market's slow, once again, aim for 15 to 25% wins, not 100% like you see most of these people do. If the market's hot, that's when you let traders run a little longer and scale in more aggressively. The market's rhythm changes and your strategy should follow it, not fight against it. Smart traders don't force trades, they follow the flow. The best strategy in the world will still fail if you apply it blindly in the wrong environment. Now I'm going to break down a real trade that I personally took. We did it in the Discord. This was an Alibaba call. Price dipped down back to that upper trend line, reclaimed that VWAP and on strong volume. We bought a long-term contract, which was January 16th, and now we're up 30%. If you guys remember what I said earlier in the video, this is where you start trimming just a little contracts and you start to move your stop loss at break even. This trade wasn't luck, it was simply execution of the exact strategy I've been showing you this whole entire video. Wait for confirmation, scale into your position, and start trimming your profits on the upside. You don't need to be perfect winning in options, you just need to be consistent and stick to a strategy that fits you. So let's recap. You one, pick your option. You next stick to clean charts and timeframes. Choose smart contracts, manage your risk, and exit with a plan. All right, you got the strategy, the charts, the tools, and even the exit plan. But there's one final piece that most traders ignore, and it's why they lose even when the setup is perfect. It's not the strategy, it's you. So let's talk about mastering your trade psychology, because until you control your mind, your emotions will sabotage your trades every single time. Most traders lose money not because of the strategy, but because they're trading out of fear. You've probably been there. You enter a trade and the second it turns red, you panic and sell, or worse, you're up 30%, but you want more and you give it all back. This is fear of losing and fear of missing out. Discipline is what keeps you from sabotaging your trade. A quote that I live by is, fear doesn't go away, you just have to stop listening to it. You cannot go through trading or life in general with all high emotions. Trading is emotional, but systems make it manageable. Here's how I keep my emotions in check when I am trading. Pre-plan my entry, stop loss, and profit targets before entering. I set alerts on my chart so I'm not staring at the screen and making emotional decisions. I walk away from the screen once the trade is in. Your system is your shield against emotional decision making. Another thing that people don't talk about is journaling your trades. You have to keep in mind, how did you feel before the trade? Were you nervous, confident? Did you feel rushed? Did you follow your rules? What did you learn emotionally from the trade, not just financially? Over time, this builds emotional awareness, which turns into emotional mastery. Something you guys also have to keep in mind is you have to recognize your psychological patterns. Every trader has patterns, and the key is identifying yours. For an example, do you overtrade when you're bored? Do you revenge trade after a loss? Do you increase risk after a big win and end up giving it all back? Awareness is the first step to change. Start reviewing your journal for repeated emotional habits and build guardrails to stop them before they happen again. I'll let you guys in on a little secret of my personal quote unquote guardrails. A few of them are: after 2 red trades in a row, I step away for the day. I don't size up after a win. I size up only after consistency. And if I'm feeling stressed, emotional, or distracted, I don't even trade at all. Most traders blow up not from one bad trade, but from a string of emotional decisions they didn't even stop in time. Build your own guardrails, put them in writing, and make them your law. Mastering psychology doesn't happen overnight, but it's for sure the final edge that separates consistent traders from gamblers. And remember, your mindset is the only thing you can truly control in the market. If you want to dive deeper into trading psychology, I wouldn't mind posting a full video breakdown on that next week, so hit the like button if you want that. If you found value in this breakdown, make sure we get this video to 100 likes. Drop a comment with your biggest option struggle, and I'm going to reply to every single comment below. Subscribe so you don't miss part 2, because we're just getting started. I'll see you guys in the next video.